This is episode number 232 of the Homeowner Show. Whether you're DIY or looking to hire, we're here to help you find the best information and options for you and your home. My name is Kevin Hackett, and here with me is Craig Williams.
Hello, and welcome to the Homeowner Show. We're so glad you could join us for another episode live. You're in the studio. What's up, Kev?
Oh, you know, just another day living in the life of weirdness.
Weirdness?
You
got some weirdness going on?
Well, my wife, she...
I do think it's weird that you have a wife.
Well, I know. We're all surprised and shocked about that. But nevertheless, I've fooled her long enough.
Okay.
But so she sends me a video of what appears to be a trench.
Okay.
In my backyard.
All right.
And I'm like...
That's a good play for it.
Yeah, I'm like, what is going on here? I don't know what's happening. And so I didn't see what she sent next, which was a picture of Toffee, my golden doodle.
Okay.
She was born in July with a mole in her mouth.
Nice.
And she had dug the entire mole tunnel looking for this mole. And it was not the first time she has done this.
Oh, really?
This is the second mole that she has taken care of.
Good for her.
And yeah, and Kimberly was like, I don't know what to do. And I was like, you don't do anything.
Yeah.
Like,
just let her do her thing.
I was like, forget that mole trap we bought. That thing's useless. I can fill in a trench. Like, that's not a big deal. But
did you get one of those like spring-loaded metal mole traps? And didn't work?
Well, I didn't try it back there. We had some up in the front of the property, which honestly probably still going to need it up there because the electric fence runs probably where she can't get it. But no, this was in the back of the property, and I hadn't tried, but so I hadn't needed that one yet. But that thing's solid.
Yeah,
it'll work.
Oh yeah, it'll kill him.
Yeah, it'll kill him. But she had I've got a picture, and I'll show it to you after the show of my dog with the mole in her mouth, and my wife had to go get my mother-in-law to hold her while my wife pried her jaws open to get the mole out, because she's like, I don't want her eating it. And I'm like, she's gonna be fine if she eats a mole. It's not the end of the world.
This is her reward.
Yeah, it's like, look, she
looks like you had some Caddyshack problems. Get that varmint. You know?
Exactly. Like I'm sitting here going, she done good. Like let her have the spoils.
Let her do the thing.
Yeah, let her do the thing. I mean,
she has the scent now.
That's exactly right. I mean, you kept Raider for us for a while, our Australian Shepherd, and to best of my knowledge, in his life, it was Possum's 0, Raider 6 in his life. I know of 6 that he killed. And I'm like, good on him. I hate those things. Yeah. So, anyway, I've got a mole-killing dog. Good. I'm really happy about it.
You could rent that dog out.
Exactly. Make money off of him.
Can't wait to see that Craigslist posting.
That's right. Labradoodle for hire.
That's right.
We'll kill your mole.
That's right.
So we'll need lawn man after.
That's right. Yeah, you're gonna have to fill in your own trench. The trench village not included.
Seek and destroy.
You could be the new landscape and lead man.
That's right. That's right.
In the post-apocalypse of the Labradoodle.
So that's what's going on in my world. How are you doing?
Good, man. So I wanted to. We've got Richard in the studio from Next Mortgage, by the way.
Yeah, we've already kind of seen his face.
Do you want to introduce yourself real quick?
Sure.
Yeah, Richard Yeppez, regional manager for Next Mortgage here in Houston, Texas. So, yeah, we're a nationwide company. Happy to be here.
Awesome.
We are excited to talk some mortgages and house buying.
It's going to be fun.
Oh, yeah. So I wanted people to get a peek at this because we're probably going to be talking about this again. I installed this in my house after the dryer debacle of the last couple of weeks.
Oh, yeah.
Yeah, so this is actually pretty cool. I bought it as a set.
Okay.
And it's a gas detector.
Oh.
Yeah, but you don't have to install it. It just goes on an outlet.
Oh.
Yeah.
Beautiful.
Yeah. And so you can actually put it in the rooms where you have those gas appliances.
So it's not a CO2 detector.
It's a natural gas detector.
It's a natural gas.
I think it can actually do natural gas and propane.
Okay.
At least until the government takes away our ability to have those in our homes.
Come and take it, buddy.
Yeah.
So this is not a detector. We're going to put this away now.
That's right. There's a weird microchip in here.
Cool. That's awesome. I mean, one of the things that people don't realize is that, those and like water leak detectors are really, really like great. Like if you've got a pan or something under your sink, or like your hot water heater or anything, you can get a cheap water leak detector or a gas detector. It's going to save you. Like that could save your life.
Oh, for sure.
Funny enough, my insurance company gave me a water detector and a detector like that, and it actually saved me money on my insurance.
Really?
If I used
They
it
gave
in
you a
my home.
reduction in your yeah. We got the same thing when they gave us a. Remember we did the episode.
Yeah.
What was that thing called?
It was a home. It was like a home
monitoring
thing.
Yeah.
And
They turned it off recently because we switched back.
Exactly.
Well, that was the thing is our insurance agent was like, look, switch over to this company. They're going to send you this thing. You get like a 10% reduction. You stay with them for 6 months and then you switch back.
Right.
I was like, okay, I'll put the thing in my house.
Yeah.
And it was cool.
Yeah.
I mean, it had you only had to put it had like a hub and then like 2 monitoring devices that were wireless.
Yeah.
And really all they were like break glass and door opener detector. So I put one on my safe because I wanted to know if somebody opened my safe.
Yeah.
And then I put one on the front door.
Perfect.
And that was and they're still there, but they're not working anymore because we switched companies.
Yeah.
Wow. Cool.
But yeah, so I've already got it installed by the dryer. Hasn't gone off yet. So either it's a crappy detector or we got the leak fixed.
There we go.
Or nobody's doing laundry.
That's right.
We will see.
Yeah. So, okay, I heard a weird fact today. I know this is there's like a weird tangential I'm about to do. But I heard it today, and I was today years old when I learned it.
Oh, nice.
And for those of you that don't know, I really enjoy the whole hunting and fishing stuff, and I go and do it as much and as often as possible. And I was listening to a hunting podcast today, and they were talking about bobcats. And they were talking about how mountain lions will eat bobcats.
Oh, nice.
And so, like, you'll find, like, dead bobcat and sometimes they'll just do it for fun. Like, they'll just bite their heads off.
Okay.
Like, you'll just find headless bobcats out in the wild. But one of the things they were saying about mountain lions is sometimes when you find what they've attacked, eaten, is all you'll find is, like, just the pelt and some bones. And the bones are completely licked clean. And someone was like, well, how do they do that? And the guy was like, don't you know? And the guy was like, no. And he goes, they have hooks on their tongue. And I was like, what? So I looked it up. And sure enough, mountain lions have hooks on their tongue so that they can get down into those
crevices.
Yeah.
What?
I didn't see that on Naked and Afraid.
It's like they have Velcro on their tongue.
Yeah.
Like hooks.
Hooks.
That's interesting.
Yeah. It was super creepy.
I was gonna say, and slightly terrifying.
And so, like, it's sort of amped up. You guys seen any of those videos of the guys that like come across mountain lions when they're out hiking and they like, they're like having like a staring contest with them?
That's why I don't go hiking anymore.
Yeah, exactly.
That just anteed up the fear level of like, I do not want some cat hook tongue in me.
Seriously.
Yeah.
I'm out.
I'm out.
Doesn't look good on the doesn't look good on the gravestone.
No.
He was licked dry, Craig.
That's a good point.
We will miss him.
He was as dry in death as he was in life.
Ouch.
All right. So, I mean, to kind of kick this conversation off, I've got 2 fun articles about the housing market right now, which I thought would be a fun subject because Kevin and I actually disagree about this. Kevin is of the opinion that in 2023, if you're still of this opinion,
I am,
that the market's going to go up and it's going to keep going up. I'm of the opinion that we're going to see a crash. So let's see, what's the date on these? All right, so
he's gone looking for research that supports his opinion. That's really what it is.
Okay, fine. We'll start. I've got 2, and the first one's from Bloomberg.
Yahoo Financial.
Here's the one from Bloomberg. Housing demand climbs as U.S. market starts to show signs of life.
Okay, here we go.
All right, so pending, and then the subtitle is pending home sales increase for the first time in more than a year.
Okay.
So this was actually yesterday that this article posted, and it says that pending sales climbed 2.9% in December on a seasonally adjusted basis for the first month-over-month increase since October of 2021. And they got some, and a lot of this is numbers that they're getting from Redfin. Okay. I will tell you, if you go over to Bloomberg's Instagram they got completely roasted for this article.
Oh, really?
Yes. Like,
why?
People were just saying they're morons.
Oh, because they're saying that that's not actually accurate, not happening.
Yeah.
Okay.
So take that for what it's worth. And then Goldman Sachs reported, let's see, when would this come out? This one came out. So that article was from the 25th. This article is from the 24th in the New York Post. It's a report, Goldman Sachs, saying these 4 cities will suffer a 2008 crash in home values. So these four cities in particular. And the 4 cities, I know one of them's like, okay, here we go. San Jose, California, Austin, Texas, Phoenix, Arizona, and San Diego, California. And their projections are saying that they will likely see a decline of more than 25% in those 4 cities.
Yikes.
So that's Goldman Sachs. Redfin saying like we're seeing like a 2% increase month over month. In December, it's gone up since October of 21, which I don't buy either. That doesn't seem right.
Yeah.
That's a lot.
I don't,
especially in Austin,
right,
where everybody is moving to, thanks to Mr. Musk, Elon.
People are.
I wouldn't say that that's the town that's going to be. Maybe all the other ones, but I mean, I wouldn't see Austin doing that.
Doing what?
As far as declining.
Yeah.
That seems a little excessive.
I don't know. This is what Goldman Sachs is saying, so I don't know. The other ones make sense to me. I kind of agree with you with Austin. I don't know that much. I mean, California kind of makes the only thing with California that this may or may not make sense is there's so many people leaving.
Yeah,
which to me creates inventory. Which that makes sense to me why the prices might drop. If they have so much inventory from people just not living there, it's going to make sense that the prices are going to come down.
Right.
Phoenix, I don't know. I mean, I don't know. I haven't heard about a mass exodus to Phoenix. I haven't heard about a lot of people moving to Phoenix.
Right.
Well, Phoenix is a really popular place to live.
Well, I know that.
The climate is year round, pretty stable. So yeah, it's dry, and that's where I grew up, and I love dry. So I mean, I didn't grow up in Phoenix. I grew up in West Texas. So it's very dry there, but so I love it. People that live there love it.
Yeah.
But I've been told that Phoenix is a real Arizona in general has some really desirable places to live. It shocked me whenever I learned about that because I'm like, this is the desert. Why would you want to live in the desert? But apparently a lot of people do.
So the crazy thing, just to kind of add on to this, and from what I'm seeing as far as what the market's doing. So yes, the end of the fourth quarter, December, last part of December, first quarter, first part of January, very cricket-esque. There was hardly a lot of movement. There wasn't a lot of applications coming through.
Do you think that was relative to what we've gone through the last year and a half, or just in general, was it quiet?
Well, the first quarter in the mortgage industry in general is slow.
Okay. That makes sense.
So it's not, so add a slow beginning to the year because we're just getting out of Christmas. We've just spent a lot of money on our family and we're just figuring out what our goals are financially. Also then we got a higher interest rate. Homes are higher as well.
Yeah.
And so that's still making you sit back in your chair saying, okay, well, am I going to get up and get into this game? So I don't see people now. Let's fast forward to today, or let's just even fast forward to Monday. Applications are up. Phone calls are coming back, regardless of what rates are today, because they haven't changed from December.
Right. So like around 6%.
But inquiries and demands are coming back a lot stronger than they were at the beginning of this month. So that's, of course, I love to see that.
Sure. Absolutely.
And so, it's kind of hard to say. I don't think a doomsday scenario is coming as far as a foreclosure boom, because I think banks in general have done so much to let people have that leeway to keep their house, because we don't want them. Financial institutions don't want houses. But at the same point in time, there's so much value in people's homes. So just like, why wouldn't you just sell it? Get your money out of it, that equity, because everybody has equity now. I think that's a difference in where we were a couple of years ago, where you didn't have that equity to refinance. So you either lost your house or you had to short sell it. Now, so many people have a lot more equity in their properties where they can at least break even and then start over.
Yeah. Well, and I think there's some people that would probably push back a little bit back on that. It's like, yeah, they have equity in it, but that money's worth less than it was, 5 years ago or whatever.
Yeah.
So I mean, like, but it's the same. It's the same to me. It's almost the same thing that people are talking about with the mortgage rates, where, a home that you would have bought. Let's just to keep the math simple. I mean, you bought it for $100,000. As opposed to when you were paying 2% interest, now you're paying 6% interest.
Right.
All of a sudden, the house that was once affordable now becomes unaffordable just because of the interest rate.
Right. Of course.
Well, and I think on top of that, we're experiencing in so many ways is psychological, in that people are driven by those things that they fear, and a lot of what they fear are things that they're unaware of. Yeah, right. We fear the things that we can't see. We fear the things that we can't control. My son was in my room last night because he thought he heard something. Right. So like, that's
was it a mole?
Yeah, exactly. Probably was. I'm like
coming for revenge.
I'm sitting here going, all right, Toffee, you're out of your cage. Take care of this.
Do your job, boy.
That's right. You got stuff to do. But like so what I think happens. So we've talked about this on the show. I was giving you a little bit of a precursor before the show about me selling my house, and a lot of people are like, "Man, you're crazy. You don't know where you're going to move, and the housing market is crazy right now. So you're crazy to risk it, right? And I understand that, but at the same time, we made a choice." And that's really what it boils down to. Are you going to make a choice, or are you going to sit back and wait for someone to make a choice over you, right? And around you, or in spite of you, right? So I think that we find that so many people have said, well, I'm going to just wait till things settle before I buy, especially before I sell.
Right.
Because I just don't know where I'm going to move. And not only that, like the apartments are full and they're expensive too. So like, what am I going to do if I have to get into a long-term lease and then I find a house, and how am I going to break my lease and still be able to afford it? And so it's all of these things that people fear, and it just completely paralyzes them, right? And so you get this analysis paralysis thing going on top of the fact that you're hearing conflicting stories.
Well, that's the whole reason I brought it up, is like, here's a great example of that. Two conflicting stories.
Yeah.
I couldn't see any like social media response to this New York Post story. I don't even think they have a comment section on here.
I guess I'm curious. Like, so you're in the mortgage industry. You've been doing this a while at this point. So like, what do you think? I mean, everybody has their predictions. Like, what do you see based on the things that you do professionally? What do you think's going to happen?
So so let's kind of rewind and see why rates went up to begin with. Okay, so the Fed got it in their head that if they raised interest rates, everybody would stop buying homes. It would slow things down. They're trying to get in front of this inflation thing, and so from what I understand, inflation's been down for the last 2 months. And so rates have started to trickle down. I don't want to say they're going down, but they're not in the sevens anymore, where I would gladly quote you a 7 at the beginning of December. They're starting to trickle back down, back into the 6s, low 6s, high 5s. And so we're seeing a moment right now where rates are starting to trickle down. The confidence is coming back, and I think that's a lot of the reason why the phones are ringing. And I think because, and I think Craig, and you were kind of talking about this, home lenders are starting to get creative on you feeling okay to buy a home again. And I think instilling that confidence, kind of like you were saying, because, a home is going to be the biggest purchase you ever make. And if you don't feel confident, if you don't walk into your home, you're like, man, I really got taken on this house, or I can't afford it, or whatnot. If you don't have that confidence that you need to carry that sizable debt, then everything post-purchase is just ruined.
Yeah.
And I think that's what lenders saw. I think they saw that, a lot of people, they were really afraid to get out of the renting market, because even though you're renting and you're throwing away your money, you don't own that asset at the end of the day, it's controlled. you know what it is. It's not going to change on you.
I can budget it.
Yes, it's something that you can control. You know what the rent is, and you know how that's going to play out.
And if my water heater breaks, I don't have to pay for
Exactly.
it. Right? There's still those things, you know?
You definitely wish when you're a homeowner that you still had that kind of service.
Right.
But yeah, so I think now what we're seeing is lenders being creative, trying to make the home purchase a little more easier. And then rates are starting to come back down because inflation is starting to be controlled to a point. And so we're seeing people step back into the market.
Interesting. I mean, I like that. I mean, our whole economy works better whenever people are not driven by fear,
right,
and feel comfortable to make purchases. I mean, that's what economies are driven by, is purchasing, So I'm a little discouraged to see gas prices starting to creep up again.
Yeah.
Because that is an indicator of a lot of things. Whenever I talk to, so we live in a very oil and gas heavy region, and we know a lot of oil and gas people, and they'll tell you like the best place is around $2.50 a gallon for gasoline. That they're making money at that point, and people feel pretty comfortable at that point. If you get down to like $2.25, $2.20, then gas companies are kind of going, I'm having to pinch. And if you get up to like $2.75, $2.80, and now we're up to $3 and even over $3 in some places here in the Houston area, people are going, I can't go anywhere. Like now travel is suspended, right? So those things even dictate people's fear in things as well. So I think it's just a really, really interesting thing. So you mentioned something that I want to come back to. You mentioned that mortgage companies are getting creative. We kind of hinted at this on one of our previous episodes.
Just real quick, the national gas price right now is $3.34.
Yeah,
but in California it's $4.52.
Jeez.
So just
one more reason they're moving to Austin. I mean,
right.
It's just the way it is. But that's not surprising to me. I mean, I know that we wind up having lower gas prices in Texas in general. But
I mean, we always do.
Yeah, we always do. And there are certain places in Houston that I know I can get cheaper gas at that location,
right,
than other places.
Just Texas in general. I mean, because it doesn't have to go very far
right,
to get into those tanks to get in your car.
I mean, I know I have to go to Waller to go to the big Buc-ee's.
Yeah,
but I'm going for the kolaches.
Exactly.
Gas prices are secondary.
Right. Exactly.
I need that rest stop and a brisket sandwich.
That's exactly right.
And for those of you not in Texas and the small portion of Louisiana, you don't know what Buc-ee's is.
Yeah.
God have mercy on your soul.
They're actually building one like in Tennessee.
Are they really?
They're starting to branch out a little bit.
Good for them.
Yeah, exactly. But so we were talking about some ways to get creative, and we were talking about one just before the show started as well. What ways are you finding that mortgages, whether it's your company or others, are getting creative to help people still feel comfortable? Like, I can get into this home and not let fear be the main thing.
So one thing that I see a lot of mortgage companies doing is I think anytime you feel like you miss out on the party, you're like, man, I should have waited. I should have not done it now. I should have listened to my mom. So what a lot of mortgage companies are doing, Rocket Mortgage, one of them, my company's doing it as well, is they're offering refinances, and where the lender will pay the cost of the refinance if rates go down a certain percentage. So just to kind of talk about our program, it's called the Rate Rebound Program. So if the rates fall more than half a point so if we lock you in at 5.5, and for the next 5 years that you have this loan, now you can be on a 30-year mortgage, but for the next 5 years after you close, if the rates go down more than half a point, so if I lock you in at 5.5 and they go down to 5, and maybe they go down to 4.5 or 4, with any time that next 4 years or 5 years, we will pay for your refinance.
Okay.
And then lender fees are just part of a refinance. There's also third-party fees, like a title company, because they have to title everything over. And so we will pay $1,000 towards those fees.
Oh, wow.
So a $5,000 in a standard category refinance turned into $1,000.
Right.
Because we're eliminating our fees, we're paying for your third-party fees, and you're just paying the remainder of those fees, which may be just escrow, which is your taxes and the insurance.
Wow.
So the great thing is that, you know, let's just say after the election next year, rates go down because just things fall into place, or the war in the Ukraine is over and rates go down.
Yeah.
The good thing is you can still buy your home now, get in on the home that you want, because, you know, you're looking for a reason. And then when rates go down, you're not missing out on the party. You can simply call us again and say, hey, I want to take advantage of my rate rebound program, and we'll lower your interest rate and then move forward with your mortgage.
Are you hearing that stuff happening in Ukraine is affecting the interest rates and stuff like that?
I think when anything happens in those kind of terms, as far as a war, that if it was just the Ukraine and Russia,
right,
and nobody helped them, I don't think it would have affected us as much.
Yeah.
But when you say, okay, well, this country's losing gas because Russia's not doing this, and now we're sending money to Ukraine, everybody's blaming each other to raise prices.
Yeah.
I think that's just that one excuse. Hey, we're doing this, and because we're doing this, we have to charge you more here. And so it's just that one other factor. Gas could probably be one of those things, you know, like I remember driving up here is $2.99 when a month ago it was $2.45.
Exactly.
So, you know, what are those factors that, you know, if the waves fall differently in Hawaii, then okay, we got to do this. So
Sure.
Who knows?
Yeah. Well, and like I don't know that they've officially done it, but like there's a lot of talks that Germany is like quietly declaring war on Russia right now through the Ukraine conflict and stuff like that. We do know that they're sending tanks, but we're sending tanks too.
Yeah.
But
still bitter from World War II then, huh?
I guess.
That's gonna
you don't get over that.
Keep happening. Sorry. Not sorry.
Who is it that does the bit about it was Norm Macdonald.
Oh.
There was like, you know, they took on the world.
That's a very Norm thing to say.
He goes, and we didn't learn our lesson because World War II came, and then again they took on the world. It's like it's a great bit.
That's good.
So, but anyway, yeah. So like, well, I know I'm with you. I mean, like anytime there's unrest and the market just kind of reacts like very, you know, aggressively about that kind of stuff. So I mean, it makes sense. I just didn't know if there was something specific about Ukraine that was like affecting.
I wouldn't say it's affecting the mortgage market, but I think it affects the market.
The market,
like you said, yeah.
Okay. So I want to circle back around to this creative rebound thing. So I don't know if everybody knows this. I mean, if you listen to our show, you should know this, that you can absolutely shop mortgage companies.
Oh, yes.
And it is valuable for you to do so because someone may have, 5.9 and someone else may have 6.0, and that 0.1 can save you, a decent amount of money, right? So especially depending on how much the mortgage price is. So shopping around gives you options. I guess one of the questions, part of my thought process is this. Most realtors have a preferred lender, and many times it's for a couple of reasons, from what I can tell. One of them is relationship. This person succeeds. This person, whenever I say we need to close within 30 days, I've never had one not close in 30 days. I trust them.
Right.
So that provides a certain amount of trust to the buyer, for that mortgage lender. I think there's also, there's other relationships as far as kickbacks here or there. Like,
what are you talking about? I like eating at Perry's on Fridays with my realtor. Okay,
right, exactly. Every Friday. And so
pork chops ain't free.
No, they're not. No, they're not. Those pork chops are thick, dude.
They're good.
They're good.
That's why you go on Friday.
I know. Yeah, Friday lunch specifically.
Yeah.
Anyway, so
So we're all guilty. That's what we're saying. Is it?
I know what I'm doing tomorrow. That's all I'm saying. So I know that those things happen, and I think we should all be aware of it. I think the question that I've got, though, is if I am a consumer and you're being not necessarily come work with me, you know your industry, what do our listeners need to be looking for in a mortgage company? Because everybody's going to say, we're going to get you the best rate, we're going to close you the fastest, we're going to guarantee this, that, or the other. But reality, there's a lot of things that play into that. Like
right.
If I don't get you the documents that you request, I could delay this, right? If something else happened, there's all kinds of stuff that can happen. But what do I need to really be looking for?
So one golden nugget that I'll give the listeners out here. So what people don't know is that when you shop for a mortgage company, when you finally say, look, I'm going to have someone try to get me pre-approved and go from there. So what happens is, let's say that Next Mortgage pulls your credit on Monday. And when we pull your credit to get you pre-approved, we have to do a hard pull. Any mortgage company worth their salt doesn't tell you, they say, oh, we'll do a soft pull. No one does a soft pull, okay? They have to do a hard pull for one of two reasons. One, because Fannie Mae and Freddie Mac give us FICO guidelines that we have to abide by. So we have to make sure you have that FICO to give you that mortgage. The other part is that we have to see what debts you're carrying. So if you have a car, you have 30 credit cards or whatnot. But what people don't know is when I pull your credit on Monday, TransUnion, Equifax, and Experian lock your credit report for 2 weeks when it comes to mortgage lending, only mortgage lending. So if you come see me on Monday, you feel like maybe my rate's a little too high, you want to shop again, and you just say, hey, I've been banking at Bank of America for years. I want to see what they have to offer. And then you go to Bank of America on Tuesday and they pull your credit. They're going to have the same scores I have, and it will be a hard pull as well, but it will not affect your credit report as an inquiry because TransUnion, Equifax, and Experian know that you're shopping for a mortgage. So you have 14 days to make that decision and make it worth your while. So come day 15, if you're like, hey, someone told me about this mortgage company here, then when they pull your credit, they're going to get something completely different because you're outside of that 14-day window. So they're giving you that opportunity to do your shopping because, of course, they want you to have the best thing too. It's no different than when you go shopping for a car and you walk in and the finance guy shoots your credit report to like 13 different banks, finding you the best deal. They're getting all the same credit report, but they're getting a credit report for their system. Same thing is when you're shopping for a mortgage, you have 14 days. So that's that little golden nugget if you didn't know that. But, you know, if you come see me on Monday, you're going to stay with Next Mortgage.
Of course.
We're the best.
Of course.
Well, don't go anywhere else.
Of course.
Real quick, what's the difference between a hard pull and a soft pull?
Yeah.
So a soft pull would be something that's just generally telling you what your debts are. And so if you think of a Credit Karma, that is a free service. Mm-hmm. Credit Karma is using their own algorithms to tell you what they think your score may be.
Aren't they? They're pulling from different sources too, aren't they?
They're pulling your information from all of your debtors. But at the same point in time, I've had a lot of people come up to me and say, hey, my Credit Karma is 700. I'm ready to buy. And then I'll pull them and it may be higher or it may be lower.
Right.
And then they get mad at me because Credit Karma is lying to them. And so Credit Karma, and that's why Credit Karma is a free service. They're simply trying to link you with other creditors,
right,
to say, hey, look, by the way, you're approved for this Apple Card. Did you know that?
It's a lead gen for lenders.
That's exactly what it is. And so that's the difference between a hard pull and a soft pull. A hard pull is going to let me know, based off of TransUnion, Equifax, Experian, this is what your score is.
Yeah.
This is what.
So somebody explained this to me once, and I've since forgotten it because I don't remember things. But there's different credit reporting systems, right? And there's some that are like that guys like you use, and then there's ones that like I don't know. There's other credit reporting like apps and different things like that
right.
they'll use.
Oh yeah.
So what are those? I can't remember.
So like those other ones, like I know Wells Fargo has something that's
CreditWise.
Okay.
Right. Like that. Those are still the same kind of Credit Karma. We're using our own algorithm to figure out what your scores are. So there's something that's called a there's a mortgage FICO. We go off of a mortgage FICO, and then there is a car credit report. So like, you may have bought a car right before you walked in to come see me. And when you bought your car, your score was probably 700s. But when you came to see me, your mortgage FICO was probably 667. And you're like, well, why is it different? I just came and bought this car. I did this. Also, a lot of people don't know is when we pull your TransUnion Equifax Experience score, we only use the middle score of the three.
Okay.
And so if you have a 700, 650, and 600, and you're like, well, hey, I got that 700. Let's go ahead and use that. Unfortunately, we have to go by the middle score of the three, so 650, and that's how all mortgage lenders practice.
Oh, really? Mm-hmm. Okay.
So another thing that a lot of people don't know is that if you're married, Texas is a community property state, for those who don't know that. And so if you and your husband apply for a mortgage and your husband's score is lower than your score, then because Texas is a community property state, if his middle score is a 600 and your middle score is a 700, we have to use the lower middle score of the two. Oh. So for qualifying, we have to use your husband's credit.
You just don't add and divide and get the average.
Yeah.
Now, there are ways to get around that, being a non-purchasing spouse and things like that, but that's when you really dig into the files. But when it comes to credit, that's the biggest part of buying a home, that credit aspect of it. But knowing you can shop around, make sure you get the best rate out there. You have 14 days to do so. Get your credit pulled, figure out, get those banks lined up that you know that you're going to work with, because it's not bad to see what are other people doing as far as rates. Now, to kind of get back to your question, what makes you feel better about one bank or from another? If your agent who you trusted to find the home of your dreams is telling you, hey, maybe use this lender, there's probably a good reason for that.
I would agree.
As far as maybe they've done a few transactions together. And so I would take that into consideration. And the other thing is the availability. Now, if you're chasing down your lender, there's a reason for that.
Yeah.
There's a problem.
Yeah.
Like if you're, hey, I got to know what my rate is, or he never calls me back, I don't understand why I'm paying this much, that may not be the person you want to go with.
Sure.
So, someone that's available, a big thing here at Next Mortgage is we're available 7 days a week. Because our biggest thing is especially for our agents and our builders that we work with, we're working when you're working. So not everybody works on the weekend, and that's when they go shopping for a home.
Yeah.
And if it's 5:00 on a Saturday, just because that's the only time you had to go look for a home, and you want to know how much it's going to cost for you to buy a home that's right in front of you, if you call me and I don't answer, or someone on my team, and you're like, how do you make that decision? And so then you're
won't.
right.
Especially in a market where you have to move fast.
Exactly. And then you're left the whole weekend saying, I lost that house because I didn't know if I could afford it or not.
Yeah.
Yeah.
So I've got a couple other questions. So one, is there any chance that if I come to you and you say, hey, our score, our rate today is 6.0, and I go shop somewhere else and they find it's 5.9, is there any chance you can change and match that? Like, do you have any leeway? Because I'm curious, and maybe I want to use you, but someone else has a better score.
Right.
You tell me that's the best you have, and like, what options do I have?
Right. So the great thing is we're very competitive, and if any lender offers your rate, especially by ourselves, if we offer your rate, it's based off of what we're looking at the time on the pricing sheet. Hey, this is based off of your credit. This is based off of your loan amount. This is the rate we're offering right now. And so if you go down the street and they're like, oh yeah, I can beat that by a whole quarter. The great thing is if you provide us with a pricing sheet from that lender and say, look, I went on the street, I didn't want to, but they're actually a point lower than you. Then the great thing is that probably 9 times out of 10, my management is going to say, okay, let's match it or let's beat it.
We want the deal. Yeah.
We want the deal.
Yeah, that makes sense. I think that's something good to know.
Yeah.
The next question I've got is, talk to me just briefly about brokers versus just like mortgage companies, because a lot of these brokers, they're shopping around trying to get the best, and I assume that you're able to shop around as well on some level and figure out. But I mean, y'all have your own things, but I'm just kind of curious, what's the difference, and why should I pick one over the other?
So Next Mortgage is a financial institution. We're not a broker. We do have the availability to broker deals out, some that we don't keep in house. But if you close with us, we service your loan. You're paying us every month. If you have a problem with your loan, we can always call us and we'll figure it out for whatever reason. So the great thing about Next Mortgage is that because we're a financial institution, we have a little more leeway than what a broker would. So what a broker does is a broker has a list of lenders that are buying mortgages, and those lenders give that broker guidelines. Look, if I buy a loan from you, it has to meet this box. And if it doesn't fit in this box, I'm not going to buy that loan from you. Mm-hmm. And so the problem is that a lot of these brokers, if it doesn't fit in the box, then maybe they don't have a loan for you. They can't get you approved. Hey, look, you came to me. You're missing that one thing in that box. I can't fit that peg in, and I can't sell it off to this other lender. Yeah. Where if you came to a mortgage company like myself, and there's that one thing that was off, I could take that to management and say, look, this person's off because of this. But if you look at his credit, if you look at his income, if you look at his job history, this is still a viable deal for these reasons. And then my management can sign off on that deal for those reasons. Where on a broker side, because they're selling these loans off to third parties, if it doesn't meet it, they don't have that kind of leverage in some cases. So a broker, but don't get me wrong, brokers work with a lot of other lenders, and sometimes they can do things I can't because those lenders are willing to buy maybe a lower credit score or something like that where I can't do it. And so it's a
shop around people.
It's a shop around kind of scenario. Some people are better than the others, but like I said, I think it's all about the service. Yeah. I boil everything down to service. Yes,
which is a huge aspect of it, for sure.
There's a lot of mortgage lenders, but if you're not getting the service that you want, I mean, there's a reason I go to a certain IHOP because this IHOP service is bad, so I go to this one.
Right.
And so it's all
it's a little bit further, but it's worth it.
Right. It's all boils down to service.
And you said something when you were explaining that I want to make sure people heard is that you're getting the bill from Next Mortgage, right?
Right.
So, and
that's actually big.
What you're alluding to is like some people get so confused because 6 months into this home purchase, all of a sudden I've got a mortgage coming
2
in.
2 months in.
I mean, yeah, who knows? I mean,
right.
Sure,
2
and
months
like
in.
it's from a totally different company, and you're like, what happened? And then you figure out, oh, they sold my loan.
Mm-hmm. And then I got confused because I mean, this happened multiple times. This happened now, where I got a new company servicing my loan, and then I was like, oh man, like what do I got to do? I got to go. What documents do I have to get them? Do they have my direct deposit? Right. Do they have everything kind of set up? And thankfully, this company was very good, and they transferred 100% of it over. The only thing I had to go do was set up a new login and password online. That's the only thing I had to do. However, I had to do it. I had to do it. And like, I don't know about y'all, but like, it's another login, it's another password, it's another website that I've got to figure out, and I got to remember, and what if I didn't bookmark it and then I threw that away? And like all of a sudden, like I just forget things because I'm so busy and I don't want to mess this up. It's my mortgage. Like this is a big deal in my life. Of all the things that I pay my mortgage, you know? and so I had a little bit of anxiety because I was busy during the time that they sold my loan. And so it was the middle of the summer, which is a super busy time for me. And so trying to figure all that out. And if you're going to keep my loan, and like that, there's something comforting about that, I think. So, anyway.
Yeah, what happened to us, which, I mean, hopefully never, is there like an Amber Alert going on?
I think so.
Is that all these devices are going off?
Yeah.
Okay.
Moles on their loose.
Sorry. Yeah. Hope they find the child.
Yeah.
She's not in here.
No, I've looked.
But what happened to us is, and it was, we'd had the loan for a while, and they sold our loan. And we'd had the account set up a certain way where we were paying the property taxes in that loan. And somebody just clicked the wrong box. Mm-hmm. And for like 4 months, we didn't pay property taxes. And we got a hit at the end of the year. And we're like, well, what the heck is this?
I hear Montgomery loves that.
Yeah. So, like, and all it takes is just some doofus clicking the wrong button on the computer when they transfer that over. And I'm sure that doesn't happen often.
Right.
But I mean, it happens.
Yeah. Well, I had a weird deal happen, and I didn't know if I was going to bring this up tonight, but here we are. A couple of weeks ago, I get a check from my mortgage company, and it is about the amount of a month mortgage. And I assume, I have not had time to go figure it out, I assume that my escrow was over, and so they had to reimburse my escrow because that's legal. They have to do that. They have to do that. And so my wife got a little giddy for a minute, and I was like, no. Stop it. That is going into savings, because surely they're going to mess up my escrow now, and we're going to have to pay that back. So we're just going to slide that over to say, because we've been caught with that before. But part of me is like, oh, I wonder if it was a tax thing. I wonder if it was this thing. But I know we've been paying a certain amount on our mortgage. So I'm just sitting here going, oh, my goodness, what has happened? But, like, that kind of stuff happens. And I think people, well, I mean, goodness gracious, when you get a multiple thousands of dollar check in, right out the month after Christmas, you're like, woohoo, and I'm just very cautious at the moment,
Right.
And because it could be a lot of things, and I need to call and find out like what's going on, but I don't want to screw that up.
Well, yeah, but you also don't want to. I'm always weird. I just kind of want to like let it ride, because it's like, well, yeah, just send that back over. That was a big mistake. I was like, no,
exactly.
I shouldn't have asked.
Right.
Shouldn't have asked.
Oh, you got that? Oh, that was actually supposed to go somewhere else.
That's right.
Right, but I mean, seriously, my mortgage is not small, and when you get a full month back, you're like, whoa.
Yeah,
that is a shot in the arm.
Definitely.
For sure. So I don't know what I'm going to do with it, but it's one of those deals where I got to go, okay, did I overpay into escrow to begin with? Which I probably did. Most likely. I probably had
you were supposed to get a letter along with that to say why you got it. If you did. Usually they give you a letter saying, hey, this is why you're getting this.
I don't think I did. I literally think that it was just a check.
So if, again, here's some more education for you. So what a lot of mortgage companies do is every March, they do what's called assessment. So every March they assess, because, everybody just finished paying taxes in December, and they do an assessment of your escrow. And so if you have more money in there, by law, they can only keep a month and a half of escrow in that little pot for buffer. And so anything over than that, they mail it back to you. Yeah. And say, look, you probably filed for homestead. Your taxes are less than what we thought they were. Here's your check back.
I'm assuming that is what happened, by the way.
Or if you run into the scenario where your school district's building 7 new high schools and taxes went up, and they're like, hey, we paid your school taxes, but you left it kind of short. So your payment's actually going up to cover. So you're not short next year. Yep. But you're supposed to know that 30 days before that new payment takes effect. So just make sure you keep a lookout in the mail around March, because that's when those letters kind of go out.
Ooh, fun.
Yeah. It's like riding this weird wave. I'm like, one day I'm up, the other day I'm down. Yeah. I don't know. I think I got knocked off my surfboard the other day.
We're going to have to edit this part from the whole podcast, because then we're like, wait a minute, we gave him a check?
Yeah, that's exactly right. That is funny. That is funny. I just think that this is one of those weird. I mean, I knew nothing. One of my favorite phrases is like one of the most duh statements in the world is like you've never done something until you do. Right. Which I think is really empowering for people. I'm like, just do it. You're acting like this is like some big deal, but just go do it, and then you'll have done it, and now you can do it again. But
unless you're a murderer.
It was. I don't know. Depends on how good you are.
As bad as I thought it was.
It was just great. I can do this again.
Depends on how good you are. But like, I think that, the first time I got a mortgage, and I was just so like happy to have a house. I thought it was kind of like paying for a car. And it's very different.
It is.
I mean, and I didn't understand escrow at the time.
Right.
I actually thought I was going to get into this house without escrowing, which I probably could have done, but I would have, it would have changed a lot of things about my entire loan process. So we decided to go ahead and escrow anyway. But here's what I want to do real quick, because I'm sure there's somebody listening on the podcast right now going, they're using this word, and I do not know what escrow is.
Talking to you, Steve.
Yeah, exactly. Exactly. So can you please tell Steve what escrow is?
So escrow is your taxes and your insurance. So
period.
period. That's it. Taxes, insurance. That's it. So the insurance, when you think about insurance, think about the same hazard insurance you have on your car that you're required to have. It's the same thing for a mortgage. So for your home, we want to make sure if anything happens to your property, you have insurance to cover that loss. And taxes are...
You're talking about mortgage insurance.
No, I'm talking about hazard insurance.
Okay.
So
that's why I'm asking. Because you get that reduction if you put 20% down.
Right. But mortgage insurance is not included in your escrow.
Okay.
Yeah. So
that's just included in your...
Craig
that's
just confused Steve and everybody else.
No, that's why I'm asking, because it all gets wrapped up in there. So
what mortgage insurance is, what a lot of people don't know is...
Stupid.
It is. It's very stupid. You don't want to pay. If you cannot pay it, ask your lender, how do I not pay mortgage insurance? And I hope he gives you a great answer.
A wheelbarrow full of money.
What a lot of people don't know is that when our parents bought a home, they had to put 20%, 10%. That was the requirement to buy a property. Mm-hmm. And then some bankers came along and they're like, not a lot of people are getting mortgages nowadays. How can we get a lot more people get mortgages and we not lose on these mortgages? Well, someone came along and said, what if we put mortgage insurance on these properties for anybody that doesn't put 20% down on their home? That way we can lower the standards to 3% down, 3.5% down, 5% down. And then we'll put mortgage insurance on that loan. And that way, if they default, we still get paid on the loan. But if they don't, more power to everybody. And we still get this little insurance on the loan. So,
and by the way, we own the insurance company.
Yes, mortgage insurance it goes absolutely nothing. It goes to your lender. It's not, it's something if you don't have to pay it, don't. But it is something that was created. So those buyers that don't have 20% down could actually own a property and then pay that fee for not putting down more than 3% for first-time home buyers.
So I think one of the things to kind of think through on this is escrow really does help protect people that are not good with money.
Savers, yeah.
If you're not someone that has money in the bank, if you live paycheck to paycheck, and if something weird happens, you are up a creek without a paddle.
Oh, yeah.
Your washer goes out. You're like, I can't buy a new washer, right? Mm-hmm. You're borrowing your friend's house. Because, and that's one of the reasons banks do it.
Right.
They do it to protect themselves, really. They force you to put all of your insurance and tax money into their little bucket, mm-hmm. so that they can pull out of that bucket to make sure that they have the money to pay for it, right? Mm-hmm. And so, again, that's one of those things where if you want to control your money and don't want an institution to control your money, then you cannot escrow, depending on how much you put down, because there's a threshold. I think it's 5%, isn't it?
You have to put down 20% to waive your escrow.
Yeah, 20%? Mm-hmm. I thought we were going to be able to do it at less than that. But
now it depends on different mortgage companies. I know TDECU, for an example. If you put down, if you do one of these special products they have, it's an internal product. If you put down 15%, they'll waive your escrow.
I think that's where we were.
Okay.
We were looking at putting 15% down. Right. They were willing to waive it at that point. However, at that point you got to make sure that you are willing to put money back, so that because at the end of the day you need home insurance.
Right.
And escrow is making sure you have it.
Right.
In fact, this actually was weird. I had a weird deal. Do you remember whenever we decided to change insurance companies, and then they said they wouldn't insure my roof?
Yes.
And so we were going to have to pay for a new roof before they would actually
insure the house.
Insure the house.
Yeah.
But we had already cut my other insurance off.
Nice.
It was a big problem. Thankfully, it all worked out. My old insurance took me back, which is really nice.
Yeah. I was talking to my wife, and
change your heart.
Yeah, it was actually one of those types of things, and we got lucky. But what's interesting about that whole thing is that if you don't have something in place to pay, and somehow you don't have insurance in your escrow,
right,
they will go buy insurance for you. And guess what? They will not buy you good insurance.
Right. No.
And they will buy you the most expensive insurance that is not good.
Oh, yeah. It's called force-placed insurance.
It's horrible.
Yeah. No, they're not shopping. They're not calling the Geico.
Nope.
You know, they're finding you Joe Schmo insurance that they're not bothered on how much it saves you or anything. And,
nope.
and you actually sign a document at the closing table that says you're supposed to have insurance for the life of the loan. And if you don't, they have the will to sign up for insurance on your behalf, and you have to pay it.
So they did that to me, and because I was in this weird vortex of I canceled this insurance, but I also canceled this insurance because I was up a creek without a paddle at this point. And so they went out.
You sent Jerry to Perry's for lunch.
Exactly. Well, here's what's
he
crazy.
Called his insurance buddy and said, "Guess what?"
Yeah. So my mortgage all of a sudden went up like $300, and I was like, "What in the world?" So I called my mortgage company, and they were like, "Oh yeah, well here's what happened. You don't have insurance." I was like, "Well, I do have insurance." They're like, "You do? When did that happen?" And I was like, "Well, this is what happened." And they were like, "Oh, you know what? This was just really unfortunate timing." They were like, that moment between when you canceled this one, had this one, but then canceled this one, and we're going back to this one, that few days right there is when we looked to find out if you had insurance.
Yeah.
And it was like, you couldn't have picked a more perfectly awful time to check my insurance, because if you would have checked a few days before or a few days after, you would have had a different result. So then I had to just prove to them that I had insurance. They refunded it. It was not a big deal at the end of the day, but it was one of those things I was like, holy cow, like, why is this so hard? Why is owning a home so hard?
My insurance is in the Matrix, I promise.
Exactly. Exactly. And anyway, those are the types of things that, you never know how to do something until you do. And once you buy a home and have a mortgage and you kind of work through the process, it makes more sense.
Right.
It really, really does.
Yeah.
It feels daunting at the time, but I appreciate guys like you who can educate people like me on the ins and outs of those things, because it's not like buying a car.
Exactly.
It's just really not.
Yeah. Especially when buying a house is a 30-day process in the norm. There's a lot of emotions that can happen in 30 days. Yes, you go buy a car. Oh, I like the red one. Oh, we're going to get it. Oh, okay, I'm okay with the payment. And then literally that whole process, whether it be a long one, because I've been at a dealership for a good 5 hours one time.
5 hours.
There's a lot of conversations that can happen in 30 days.
Yeah.
And so making sure that you keep your hand on the buyer and just letting them know, okay, this is where we're at. Okay, we just got the appraisal in. Okay, your file just came out of underwriting. You have to have those conversations because they want to know what's going on as much as that your agent wants to know what's going on as well. And if you're keeping them in the loop saying, look, your file got to this point, now we're at this point, they know there's some progression. And so sometimes no news is bad news, but no news can be, scary as well.
Yeah.
If you don't know what's going on. And there's so many horror stories I've heard where people get to the closing day and then they find out they're not even approved for their mortgage.
Well, and that actually, we had a weird situation happen when we were moving to Houston. We had a home that we found that we wanted to buy. It's a long story, so I'm not going to tell the whole story. It's really crazy. Right. But the reason we didn't get the house is because the sellers got nervous because they had another buyer that literally the day of closing, their loan fell apart.
Yeah.
And the reason their loan fell apart was because the buyer had lied on some things.
Nice.
And it was one of those, quick close types of things. Mm-hmm. And they had lied about some stuff, and they'd gotten all the way through to the end, and it fell apart. And so those things do happen, unfortunately.
Right.
But, it's one of those deals where if you have a good mortgage company, they should catch that before the last day.
Definitely. So for those thinking about lying on their mortgage application, don't. I see everything.
Yeah.
Everything.
Yeah.
What is it that usually people are trying to cover up in those? I'm sure you've had people try and hide stuff from you.
Right. So a lot of the thing is like, let's take one guideline is 2 years of employment verification.
Okay.
Well, when I start doing my verification of employment and realize you have a 2-year gap or a couple of months gap, well, you need to tell me those things. Mm-hmm. Not because I'm going to decline you and you got to walk away. It's because I need to prepare your file for that kind of, okay, well, you have a 4-month gap because you broke your leg or because you had COVID. We had a lot of that.
Oh, okay.
And people had COVID. They took off of work for a lot of time. They weren't getting paid. And so when you look at their W-2s and you're like, well, hey, you're supposed to be making 52. You only made 34 that year. Why?
Yeah.
You know, we need to build a case for your application. This is why we're approving them. Okay, well, why'd they have the 4-month gap? He had COVID. Here's his doctor's letters. Here's this. And we can proceed forward. And, like, I never want to get into a situation where I'm trying to decline. I'm not looking for reasons to decline you. I'm making sure I eliminate those reasons to decline you. So my thing is, I want to get you approved. I need to know as much as you know. So when the underwriter looks at your file and she has questions, oh, well, here's the answer. Well, here's the answer. And so if she's finding stuff and I'm like, oh, I should have known that.
It's not good.
That's not good for anybody.
Yeah. Well, I think it's important to know that 2 years is really, really important because I think a lot of people even get into a situation where they're like, man, the side hustles are really big these days. You know, people, trying to make a little bit of
Food
extra
service,
money, all kinds of stuff, right? And so they're like, oh man, I'm making so much more money. Like now I can afford something. And they're like, they walk into a situation. They're even working with their realtor, and they're like, hey, we can afford $2,500 a month right now, and so we can buy this house. And the realtor's going off all that information. They get to the mortgage company, and they're like, well, last we can tell you could only afford $1,700 a month. And they're like, no, I can afford $2,500. I can show you. And they're like, well, you can't use that because you've only been doing it for a year and a half.
Right.
Now that 2-year VOE is really, really important.
So, especially when you're self-employed and doing those side hustles, because they are really big right now. It's all about, I tell people, and when I tell them this way, they understand. If Uncle Sam doesn't know about it, I can't use it.
Yeah.
And so, yes, you're making $2,500 in Uber Eats. Congratulations. Maybe I need to start doing it. But, but if you're not doing your taxes on that 1099 that Uber's giving you and saying, look, I'm making $2,500, there's no way I can use it just because it's not consistent.
This is why they've changed so much recently, like where you're going to be getting those digital 1099s from PayPal.
Right.
Yeah.
If you do anything over $600.
Venmo, PayPal, Zelle, anything that you have paid for one person over $600, you're gonna get that
when it's cumulative.
Yeah, exactly.
So, but there are ways around it. I mean, you can do like from family.
Yeah.
But
they're all my uncle.
That's right. I mean, every single one of them.
That's my uncle too.
Yeah.
It's like, sir, this clearly says OnlyFans.
Yeah.
We know what you're doing.
Right. We get it. Yeah. Anyway, well, Craig, what questions do you have left?
Yeah, I was going to ask if there's anything else that you can be competitive with from other mortgage companies. I mean, like we talked about rates, we talked about service. Is there anything else that, where you maybe not like wiggle room, but something that you guys do that's different, something where you have a little bit more, maybe wiggle room might be a good way to put it. I don't know.
So again, because we are a financial institution, we our biggest job is, we're not like a Bank of America that has checking accounts and we have credit cards. Our biggest thing is mortgage.
Right.
We're only trying to give you a mortgage. I'm not trying to give you a credit card or anything in between. We're just looking to make our mortgage service better.
Yeah.
And so we're still one of the few mortgage lenders that offers down payment assistance. So for those buyers that want to get into the home, but they haven't saved that money to buy a home, we offer down payment assistance through T-Shack, which is a grant company in Texas. And so we do that in other states as well. We actually have a program called Home Fund It. And the best way I can describe Home Fund It, it's like a GoFundMe account for your home.
It's like having a baby shower for your home.
That's
right?
exactly what it is.
We talked about this.
Yeah, I think we talked because you can do it as part of like your wedding invitation.
Yes.
You could do it as part of anything. You're
Yeah.
graduating from college. Send me money. Don't send me a leather suitcase for a job I probably won't get.
Yeah.
Hey, I'm getting married. Don't buy me a wedding set. Send me money. And the great thing about the home funded account is the way gifts used to be before is you needed a paper trail. Okay, your parents were giving you $10,000. Okay, well, I need to see your parents parents' bank account. I need to see where they got it from. I need to see the money coming from their account to your account. There was so much information that had to go. And some parents don't want to give you your bank account.
For sure, yeah.
So the great thing about Home Funded is that anybody could put money into this account. Your teacher, your friend, you could put it on Facebook and tell your story. And all the money that's raised from that account, Next Mortgage doesn't take a penny from it. They bank it into your account, and that money can be used towards your down payment and closing costs. And the great thing is for first-time home buyers, for the first $1,000 they raise, I match that $2 to 1. So I will give you $2,000 for every $1,000 you raise, up to $2,000. So if you just raise $1,000, you got $3,000 right there.
That's huge.
Towards your down payment.
Towards your down payment that you didn't have before.
So, and I think we asked this question before and didn't get an answer. I can't remember, but you can update my brain. For the people receiving that money as the gift, do they realize that as income for their taxes? So, like, say they get it and they're hanging on to it for like 4 years,
right?
Do they realize that as income in the first year, or how does that work?
So the great thing about it is that you could actually, there's no timeline when you can bank this money. So like you could be a freshman in college, start this whole thing up, and then not bank it until you're a senior or graduating. So the money that you're getting from this is a gift. It is gift funds, because the caveat to it is that once you get approved with me, and let's just say things happen, maybe you lost your job or what happened, and you can't get approved for a home loan, but you've gotten all this money. That is money that your family and your friends have gifted you. And so that money necessarily you could keep, but the
keep as in like you could pull it out and use it to like get groceries?
Yes.
Or okay.
Yeah, you can use it.
It's your money.
Walk away with it.
But not your $2,000.
Right. Not my $2,000. Hey, no, I'm gonna keep that part. We're like, are you sure you don't want a house?
That's actually a really good deal.
Right.
Yeah.
It's a huge deal.
Yeah. Well, and something else you mentioned that I think is worth mentioning. You were saying we're not like these other financial institutions where we're trying to get you like a credit card or a car loan or something. Is that a way that other institutions are incentivizing people? Is like, look, if you open this credit card with us, we can do this on your home loan, kind of a deal.
So I can testify this because I used to work there. Chase has Chase Preferred clients.
Yeah.
Sometimes those guys get a better interest rate than I can give them, because they're Chase Preferred.
Right.
Because they have what's called multiple accounts. So if you're a person that has a check and savings, and then you have their Sapphire and then all that good stuff, I want to earn your business. So I'm gonna give you a lower interest rate on your mortgage than probably I would. So there's incentivized to do that. But then Chase isn't going to give you a rate rebound where you can refinance and they'll pay for your lender fees.
This is going to be whatever the best rate is right now.
So it's all about seeing where I could win. Okay, well, Chase is giving you that. If you gave me a lender cost worksheet of what they're doing, you can give it back to me, and I can go see if I can match that.
Okay.
And do what's not.
Yeah.
And I'll be completely honest. I'm not going to win every deal. But I'm a firm believer there's enough business out there for all mortgage companies that, as long as you provide that level of service, it's going to come to you.
Yeah, well, I think that's true of most businesses, man. As long as you're willing to hustle, there's plenty of business for everybody.
Definitely.
I mean, nobody's going to go hungry.
Right. No. Exactly.
So, not around here, at least.
Not around here. That's for sure.
Yeah, anything else?
No, yes.
Yes.
But no.
No.
So,
at the top of the hour.
Yeah. No, the thing is, and I don't know if Craig prepped you on this or not, but all of our first-time guests.
We haven't done this in a while.
We haven't done this in a while because we've
doing live shows.
We've done live shows. We've done some other things. We've done some, just Craig and me here and there. But most of the people who have stuck with us for an hour and 8 minutes so far are anxiously awaiting the Final Four.
The Final Four.
That's right. This is the Final Four questions we ask each and every one of our guests. And guess what? It's your turn.
And the prize is a CO2 sensor.
That's right. That's right. So here we go.
You got to answer correctly.
We're gonna start from the top. So here's the question.
Okay.
What's the must-have tool you won't leave your house without?
What I don't even know what it's called because it's so crazy. It's one of those tools that you kind of open up.
Multi-tool.
A multi-tool. There you go. Multi-tool. It's pliers. It's a knife. It's everything you want it to be.
Okay.
I think Gerber makes like a really good one. Right?
Yeah, I mean, there's a few different
I got mine at
companies that-
Academy.
But there's like a brand that everybody uses. I know it's not Gerber. Gerber makes one, but there's
No, it's the oh my goodness, you're making us everybody right now that's listening to us
Those
is
morons.
going, those idiots.
It's clearly Witchabadoo.
It's exactly what it is. Goodness gracious, what is it? It's a brand.
yeah.
Holy cow.
Here's the Gerber
It's a-
one. I'm
It's a
looking at it up.
multi-tool. It's not Gerber.
Leatherman.
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 Everybody's going, "Dang, finally they
There it
figured
is.
it out.
Is yours a Leatherman?
I don't know. What
You don't
it is.
know?
I don't think it's a Leatherman.
Okay.
But, I mean, they're
It's Academy brand. There you go. That's
there.
good
You
enough.
go.
I think they carry that.
Yeah.
Should- you-
Maybe.
I'm sure they do.
Probably a Leatherman.
All right,
It's
ready
the first
for
thing I'm gonna look at.
question number 2? Here we go. Question number 2. What's a job you walked away from? Now, when we wrote this, there's a lot of people who probably don't know this here. So when we wrote this question, what we really meant was, what's a project at your house that you walked away from? Like, this is the homeowner show. So, like, is there something that you had going on at your house that you started and you were like, nope, shutting it down, calling the contractor, I'm not going to finish this, or your wife was like, nope, you're not going to do that. But that's not what we asked. We asked, what's a job you walked away from? So you can take that however you want to. So I'm now asking you the question. What's a
Ceiling
job-
fan.
Ha-ha! This is going to be good.
My old nemesis.
Tell us more, oh wise one.
The old ceiling fan. So I wanted to put a ceiling fan in my backyard, okay? Because in Texas it gets kind of hot.
It does.
Want to be covered patio, one ceiling fan. But what I didn't know is that when they put the outlet in my home, they had 2 outlets. One was for the turn on the fan, and one was to turn on the light.
Okay.
And so the only thing that was out there was the light. And there was just more wires when I took everything apart that I knew what to do with, even after watching YouTube over
Yeah.
and over and over again.
Uh-huh.
And so finally, I just had to pay someone to come out.
Yeah. And they're like, oh, well, if you would have done this
Hey,
to that.
I loosened it up for you pretty good. So you just got,
Right.
you just got to take it over from here.
Right. Right. So this only gonna be like $20, right? Because it took you 5 seconds
Right.
to do that.
The YouTube said 4, but
Right.
there's 8.
Now, YouTube had a green and blue wire.
Theirs were perfectly separated too. They were all, these are hard and rigid. Those looked pliable and
I
soft.
see a yellow and blue, but I didn't want the yellow to be the green. So,
Yeah, so I will tell you that my brother-in-law is currently he's a firefighter, but he was an electrician for years and years and years, and one of the smartest guys I've ever met. And I regularly am at my house, and I'm like, every time he's like, oh, what is this? Kevin's calling me. It's an electrical problem. So I'm showing him something. I'm like, what is this? And what is
Nice.
that wire? And the most recent one is I had one of those. It was a receptacle that had an outlet on the top, and the bottom was a toggle switch for a light.
uh-huh.
And so I was wiring it outside, and I was like, I can't. It's not clear in the instructions. I'm trying to make this work, and he was like, yeah. Well, there were two black wires coming out the back of it, and one of them I had to hook up to power. No
Yeah.
big deal. I did that. I'm like, what am I supposed to do with this one? And he was like, yeah, loop it back into itself. I was like, what are you talking about? And he was like take it and put it in that hole above it. And I'm like, really? He was like, yeah. Well, I would have never guessed that.
That's the last thing I want
That's
to
the
do.
last thing I would have done. I would have
like-
never done that.
It's like having extra pieces on a Lego set. You're like, these got to go somewhere.
That's exactly right. Right. And I'm like, so you want me to put it into itself? And he was like, yeah. And so I was like, okay. And so I turned it on. I took a picture later. I'm like, it worked. And he was like, I know. And it was just one of those weird deals. You're like, nobody tells you these things.
Right.
Like, how am I supposed to know?
You just imagine the conversation. You're messing with me.
Yeah, exactly.
You know it won't kill me,
Right.
but
You know that?
That's right. He's like, I remember that one time whenever you did the thing.
Uh-huh.
Yeah, I'm going to get it back
now
right
it's
here.
coming right now.
It's like, bro, there's a house fire behind me right now. You're calling me about this line.
Exactly. Yeah, exactly. He's like, I'm over here trying to clean the truck. Anyway, it worked. So I totally understand.
Yes.
Craig and I will tell you, like, there are a lot of things we'll work on. But when it comes to electrical, we're like, nope,
I'm out.
I'm out. Like, that's, I mean, I I'll look at it.
Right.
And then, I mean, I'll